Hey, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly video with our friends at Strategas. Today, I'm thrilled to be joined by Washington research analyst Courtney Rosenberger to talk all things DC. Courtney, how are you doing today?
Good. How are you?
Yeah, I'm doing really well. Thanks for asking. We're thrilled to have you here. There's obviously a lot going on both domestically and internationally. But let's start at home. Build Back Better is kind of getting a second wind here. Maybe slim down, maybe smaller, less taxes, less spending. But I wanted to just start there. What are you seeing on that front, and how are you all handicapping the odds of something getting done, especially in a midterm election year?
Absolutely. We're referring to it as Build Back Smaller. And I think that there hasn't been a lot of attention given to this. The failure of Build Back Better at the end of last year seems to have led investors to kind of move on from Build Back Better and the risks of increased tariffs or increased taxes and potentially the benefits of greater spending. But Democrats are insisting that they're going to come back to this in the second quarter. And Congress still has a budget reconciliation, which allows them to pass legislation in the Senate with 51 votes through the end of the fiscal year, which is September 30th. So they do have time. Certainly the midterm calendar is an issue, but they want to get this done in the coming months. So this will be a more slimmed down package. Again, we're calling it Build Back Smaller, but it has to be paid for. So there's still tax increases part of this. On the corporate side, Democrats are eyeing a 15% minimum corporate tax, as well as bringing back the 15% GILTI tax and a 1% buyback tax. It's going to be hard to do some of those corporate tax provisions for calendar year 2023. So there could even be a delay there until 2024, but certainly something that investors should be keeping an eye on when they're making investment decisions. On the individual side, surtaxes on wealthy are coming back, as well as SALT. That's certainly a target for some of those House Democrats that are potentially vulnerable going into the midterm elections. And then drug pricing is also a pay for that's being targeted. We don't expect anything worse than what was in the House plan, but something to keep an eye on for those biotech and pharmaceutical companies. The spending side, I think, is really interesting because climate continues to be one of the huge areas for Democrats, but given the higher gas prices and energy price concerns, there's certainly going to be, particularly from Senator Manchin, more of an approach for an all of the above energy strategy. Healthcare is probably the other big area that we're going to see on spending here. So enhanced ACA subsidies, so potentially making those COVID subsidies permanent for the ACA exchanges, and then also trying to expand Medicaid to some of those non-Medicaid expansion states. There's currently 12 of those. So those are kind of the key pillars that we're watching in terms of a Build Back Smaller package. Certainly, as we said, midterm calendar could be a problem. And then there's also issues with inflation. We probably need inflation growth to start to decelerate, and that has not happened yet. The budget deficit needs to come down. We're trending in that direction, certainly with the latest numbers that came out for March. And then we also need COVID probably to recede. And it seems like we could get a little bit of a resurgence in the coming months on that. So that's also something to watch.
Yeah, a lot to watch, but you mentioned the main thing, which is inflation. It's the big story everywhere. March 2022 numbers just came in at a 41-year high. So inflation is the big headwind for investing. It's the big headwind for policy right now. On the energy front, which is a big piece of this, what is the administration trying to do? They've released some reserves from the SPR. What else are they looking at to try and battle this inflation?
Yeah, they're trying to do anything that they can because voters in all polling that we're seeing are more concerned about inflation and gas prices than really anything else at this point. And one of our favorite charts around elections is that a president's approval rating tends to move inversely with gas prices. So no administration wants high gas prices because it's easy for voters to notice that change at the pump, particularly going into a midterm or any election year. And polling indicates that voters are blaming the Biden administration for higher prices, despite the White House even trying to frame this as spikes due to Putin's invasion of Ukraine. So the administration is trying to do anything that they can to show that they're combating higher gas prices. As you said, we've had historic announcements around the Strategic Petroleum Reserve. They're talking about releasing up to 180 million barrels. That's the equivalent of 1 million barrels per day for the next 180 days, or 30% of the Strategic Petroleum Reserve. That's a historic, huge release. There's also an announcement recently that they're going to allow the sale of 15% ethanol gas in the summer months. Historically, that's banned. And we could hear increased talk of potentially even sending checks to consumers. And we've even seen some states propose that. It's probably unlikely that we get a cut to the 18.4 cent per gallon federal gas tax, although we have seen some states try to make some movements on their own state gas taxes. But really, the administration is trying to do anything that they possibly can.
Yeah, absolutely. And in a midterm election year, certainly not a problem that the administration wants to be dealing with. All right, let's finish by zooming out a bit. You all have written extensively on the topic of deglobalization in this world of geopolitical shocks and COVID-19 and spiraling energy prices. The idea that the world may be shifting on the globalization front. What does that mean to you? What do investors need to know? And how are you thinking about that in the world today?
Yeah, deglobalization is probably one of the biggest themes that we're dealing with right now. And we think that that and onshoring will continue to be themes as geopolitical risk and domestic economic concerns build, across the globe. We've seen some carrot measures from the administration to try and bring companies back to the US and protect supply chains. The president invoked the Defense Production Act to encourage domestic metals production for electric vehicle batteries. We've also seen Congress really over the last year, try to pass legislation to give $52 billion of support for domestic semiconductor manufacturing. Those are good recent examples of carrots, but with any carrot, there's also sticks. And in that same legislation to try to do a $52 billion of aid for semiconductors, the House version includes measures that would give the government more oversight of US companies' outbound investments. And then tariffs. I mean, tariffs are still being used to try and bring companies' supply chains back to the US. That's notable, I think, in the space of the overall inflation debate, because there's very few tools that the administration has to try to combat inflation. Something that they can control is tariffs. And we still have tariffs in place on $360 billion of US imports from China. On the trade tariff issue with China, we do anticipate status quo kind of going forward. The administration actually has some opportunities if they wanted to remove those tariffs in the coming months. We don't anticipate that they're going to take them, but there's also national security personnel arguing for increased tariffs on China, and we don't think that that's the path that's going to be taken either. But I think it's important to note that there's really no difference between how the Biden administration and the Trump administration have approached trade and tariffs, and there was a thinking going into this administration that there would be really big differences. And de-risking and supply chain and geopolitical concerns aren't just limited to the federal government. We're seeing equities in the S&P 1000, the S&P 500, European equities that have the most exposure to China underperforming their broader based indexes this year, and particularly over the last couple of months. So something that everyone from investors to the government's concerned about.
Yeah, it's a big long-term theme, and it's not going away anytime soon. And it basically affects, every part of the modern economy and markets. So we'll keep watching what you all have to say about it. We'll hopefully talk to you again soon. But I want to thank you so much for your time today. It's been really insightful.
Thank you.